One of the catalysts for the drop in the stock market was Federal Express. Federal Express dropped the bombshell on the markets before they opened based on its pre-announcement of lower than expected earnings, and they're going to lay off 10% of their workforce, which is a lot of people. FedEx was down 21.4% by the close. I think the low was down about 23%. This stock had a 52-week high of 266 and it closed at 161. So that's a 40% decline from the high, the biggest one-day decline in 40 years. And if you remember, FedEx was one of the darlings of the COVID era. It was one of the stay-at-home stocks because a lot of people were staying at home and shopping, but they were shopping online. And one of the reasons they were shopping so much is because they were getting stimulus checks that in many cases were 2 to 3 times as large as their paychecks. And some of these people who were staying at home weren't paying their rents. A lot of them weren't paying interest or principal on their student loans. And so they had a lot more money to spend. And so they bought a lot more stuff. And so Federal Express shipped a lot more stuff. And so people were buying into FedEx as if we were always going to be locked down and the online shopping spree was going to continue indefinitely. But of course it didn't, especially because all the money they printed so those stimulus checks wouldn't bounce caused inflation. And because inflation caused prices to rise so much, that put a damper on the shopping spree. That's why all of these stay-at-home stocks are getting killed. And I think FedEx still has a ways to fall. In fact, if you look at that chart, it could drop down to about 100 and just get back to the COVID 2020 lows. I'm sure a lot of people were very shocked to see this 21% drop overnight because a lot of people look at FedEx as some kind of blue chip stock and they buy it because they don't think they're exposed to that kind of risk. Well, there's a lot more risk out there than people think, including more risk for Federal Express. If you think about how the current economy is impacting Federal Express, first of all, the cost of shipping is going way up. Their fuel costs are higher, their labor costs are higher. So that's impacting profitability. But at the same time, package volume is shrinking and it's going to shrink a lot more because even though consumers are spending more, they're not buying more, they're just paying more. Prices have gone way up. So when people spend money, they're spending more money to buy stuff, but they're buying less stuff. They're paying more, but they're buying less. And if they're buying less, then the volume goes down. And so there's not as many packages for FedEx to deliver. So their deliveries are going down, but the cost of the deliveries they do make are going up. Their profits are getting squeezed. And of course, they're also responding by laying off workers. And that's another prediction that I've been making about inflation. I've been saying that not only is inflation going to push up prices, but it's going to hurt the economy because it's going to cause a reduction in real economic activity and it's going to cause layoffs. And layoffs are coming as real spending is going down. And that's when the Fed ultimately is going to pivot.